Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's the long weekend cheer that we're seeing in the markets today. Nifty is up around 300 points and so are the other broader market indices. So we'll discuss that, but a lot to catch up on the markets as well.
You're right. Markets are determined to end FY24 on a strong note, so that's the good part. But first up, let's have a look at the top headlines. Stocks see a strong rally led by financials and IT. Heavyweights, even as realty and consumer durables are the soft spots. Mid-caps marginally underperform.
VIP Industries rallies over 12% as it guides for double-digit revenue growth from the current quarter. The company and its analyst meet also said that it will see market share gains starting from the first half of FY25.
Aegis Logistics gains after IIFL Securities initiates coverage on the stock with a buy rating and a target at 500 rupees a share. Says the company is a formidable player in the liquid and gas cargo logistics business. Stock up 11.5%.
Latent View surges after announcing 70% acquisition of Decision Point Analytics for $39.1 million. Company will fund the acquisition with existing cash reserves. The stock is up over 5%.
IDFC First Bank remains under pressure after 2.25% of total equity changes hands, worth nearly 1,400 crore rupees. Sources suggest that Cloverdale, that is Warburg Pincus, is the likely seller.
Okay, all right. Those are the top headlines for the markets. Let's take a look at the rates right now. The Nifty is up 300 points. The Midcap Index is up 400 points. The Midcaps are actually underperforming the benchmarks today. But Nifty at the day's high, that is something that the bulls like for sure. So is the Midcap Index as we speak. The Bank Nifty too is doing well in trade today, 1.2% higher there. And a lot of broader market movers on the back of maybe brokerage notes or news updates as well. So it continues to be a very busy day. But yes, the last trading day of this fiscal and also the monthly expiry.
You're right. The monthly expiry is something, especially in the last hour, we could see some heightened volatility. Mid-cap, small-cap and the NSE 500, the broader end of the markets. The mid-cap index are up for the 5th straight session. The small-cap and the NSE 500 index up for the 6th straight session. So the kind of volatility that we saw in the couple of weeks gone by, clearly that is now over us. But in our special segment, Mid-Cap Movers, we have Hormas to take us through the mid-caps that are moving around in the session. Hormas, quite a comeback.
Absolutely, and it's not very often that you get to say that the large caps are outperforming the mid caps, so we take it with both hands. But we'll talk about some of the mid cap movers in today's session, starting off with VIP Industries. As you just highlighted, it is the best single day gain for the stock since August of 2021 after some very bullish commentary from the management in an analyst meet. 12% higher, almost 13% now for VIP Industries. Century Textiles is 9.5%. That is doing very well for itself. Suzlon now is up 5%. Tata Investment, after 11 successive days of losses, 10 of which were lower circuits of 5%. Now it's up 2 successive days in a 5% circuit. And Piramal Pharma also extending gains after a very strong session yesterday as well. But the stocks, the sector that is leading the charge today is PSU banks, and all constituents of the PSU banks are trading with PSU Bank Index are trading with gains, be it SBI, be it Bank of Baroda, Canara Bank. But Bank of Maharashtra up 6%. Punjab and Sindh Bank now is up 8% as we speak. Indian Bank is up 6%. Indian Overseas Bank another 7%. And Central Bank of India 7% as well. A caveat, 3 of these names have extremely low float in the market. So some caution advised there. Some stocks doing well on the back of volumes, and they'll do come up on your screen. Godavari Power is the one trading on very heavy volumes, 4.5% for them. Deepak Fertilizers is up 4%, slightly off the lowest point of the day, but doing well. Kaplan Point is up 4.5% at the day's high. And EIH cooled off a bit from the day's high, but still up 3.5% on very strong volumes. And lastly, the underperformers for the day, ICICI Securities, a negative reaction to the news developments coming in. AIA Engineering 3.5% lower. Blue Star, the start of the early summer, 3% lower. But Safari Industries is down 3%. Courtesy, cannot say really because of the move in VIP Industries, but down 3% nonetheless. Back to you.
Okay, all right. So that's a long list actually. Broader markets, they always are very active. Thank you, Hormas, for joining us with that list. Let's now welcome Samit Chavan from Angel One for a technical check on the market. Samit, good afternoon. Thank you for joining us. Well, do you think there are more legs to this rally, considering that there's this one last hour, crucial hour, considering the monthly expiry today, or do you think we are going to see these levels for now?
Good afternoon. It clearly seems that market is clearly wanting to see off the financial year on a positive note. We have been consolidating since last few days, and today we are seeing a good traction. It's a broad-based participation that we have been witnessing since morning. We were seeing important level as 22, 250, 22, 300. Nifty has managed to surpass these levels with some authority, and importantly, financial space, the banking space, which has been sulking a bit of late, it has contributed and it has bolstered the overall sentiments in the market today. So that's clearly a healthy sign. And going ahead, it seems that we are going to challenge the recent highs of 22,526 that Nifty had clocked a few weeks back. So overall, the bias remains positive, and the base now from 21,800 has shifted towards 22,050, 22,200. So overall, the bias remains positive, and in case if we see a fresh leg of the rally in the coming week itself, and Nifty managed to surpass 22,526, we would see extension of this rally probably towards 22,708. So next couple of days will be quite crucial, as long as our major indices are concerned.
Thanks for that, Samit. So the bias remains positive as per you. Any individual picks that you have at this point of time, all on the long side, or do you have a few short calls as well?
Considering the overall momentum, we have picked out a couple of long ideas. Grasim is the one stock, that has entered an uncharted territory itself today itself. And on the daily chart, we can see a breakout happening from V-shaped pattern. So we would expect a continuation of this rally, and this stock is now likely to head towards 2,400, 2,450 over the next few trading sessions. So Grasim is the one stock that we like for a target of 2,200. Stock can be placed around 20 to 20. Apart from this, the entire auto space has been doing well. M&M, which has been consolidating, has seen some price correction in last 2 to 3 weeks. It has resumed its upward trajectory, and since morning we are seeing good traction in this pedal counter. So we like M&M, for the target of 1980, 1985. Stop can be placed around 1908.
Okay, all right. Thank you so much for joining us, Amit. Those are some technical picks. With that, we'll slip into a short break. Management of PG Electroplast will join us next to discuss the business outlook and much more. Stay tuned for that. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. It's time to focus on PG Electroplast now. Brokerage firm JM Financial is bullish on the stock. They've initiated coverage with a buy rating and target of 2,430 rupees a share. They say that addition of new product segments and customer addition in segments like EMS will drive growth for the company. To discuss this and more, we are joined by Vikas Gupta, the Managing Director at the company. Mr. Gupta, good afternoon. Thank you so much for joining us. But I wanted a sense of if you're on track to achieve that specific Q4 guidance that you'd given, sales guidance of 1,075 crore rupees, EBITDA guidance of 100 crore rupees, and the fire that happened recently in one of your factories. Will that impact the guidance that you had given?
So, good afternoon. First of all, let me reiterate that the guidance that we are given for Q4, we are sticking to that, and we are confident of achieving the numbers that we are given in our guidance for Q4. Regarding the fire that we had in one of the warehouses where we used to store some raw material, that was an unfortunate incident, but that does not have any impact on the production or on the revenue that we have guided for Q4.
Mr. Gupta, so for FY24, if we recall correctly, you had given a top-line guidance of close to 2,800 crore, and an EBITDA guidance as well as the EBITDA margin guidance of close to 7.5%. So are you on track to achieve that? Can you exceed that? In FY23, you had managed to exceed that, and JM Fin expects you to exceed the FY24 guidance as well.
I would like to stick to the guidance that we are given. We are already in the almost end of the financial year, and we are confident the numbers that we are given in our guidance, we are going to stick to that.
Okay, so you'll be able to achieve your guidance. We'll see whether you surpass it the way you did it in FY23 or not. Mr. Gupta, let's talk about what's driving this growth that you're talking about, especially in quarter 4, because you've seen a quarterly run rate of around 532 crore rupees or 500 crore rupees thereabouts, and now in quarter 4 you're talking about 1,000 crore rupees in terms of revenues. What is it driven by, and is it because of newer segments you're adding, better margin performance? Can you explain that to us?
Please understand, for our company, always the quarter 4 and quarter 1 are very good because those are the peak production and sale months for the air conditioning and the other air cooler products also. So we are seeing a very strong growth in air cooler and air conditioners. And for other product categories as well, we have created a kind of a funnel of products and the clients, which is helping us driving our volumes, and we are bullish and we are very confident of continuing to grow in all our product categories that we are working on.
Okay, Mr. Gupta, so a couple of years ago, it could be said that the plastic molding business was the business that was giving or contributing maximum to your top line. Now, by the end of FY24 and FY25, what will be the revenue mix at your company, given the fact that you're consistently adding new product categories? You've gotten quite a few customers as far as the washing machine category is concerned. So what would be the overall product mix? And FY24, what will be the total number of clients that you have as far as the washing machine business is concerned?
Please understand, for our total revenue, definitely a few years back, casting molding used to be a major part of our revenue. But we have pivoted our company towards the product manufacturing. In the last 5-6 years, we have invested heavily in developing our capacities and our capabilities in our air conditioners, in our washing machine business, and that are bearing good results for us. And for the revenue breakup, air conditioners should be around 1,300 to 1,400 crores in FY24 for us, and the washing machine should be almost around, and so coolers will be almost around 40-50 crores. Electronics is one big category which has grown very rapidly for us, and we are very bullish, and we are experiencing more than 100% growth in our TV business going forward. So for us, all the products are firing, and we are very confident in the coming quarters also we'll be able to in the growth momentum.
Mr. Gupta, I just wanted to follow up on that electronics business, because you're talking about 100% growth in that business. Would that impact margins in some way? Because usually that is a low margin business as per the industry data. How do you look at margins panning out in that particular segment?
Please understand, for televisions, we have already made a joint company with China Group, and we will be moving business from this PG Electroplast to a JV company. And we have created a new facility for TV manufacturing, which is one of the best TV manufacturing facilities in India right now. And we have already started our trial production there. So for PG Electroplast as a whole, there will not be a major change in the margin profile. Definitely, when we look at televisions is a low margin business, but we have to see television business with the parameters of return on capital employed and return on equity. And because we can generate a very large asset turn on lower capex, so I think TV business is a good business.
It is a good business, but as you said, it would be low margin, so it would not dilute the overall average margins for you, is what you're saying. And what about revenues? How much would that contribute, say, 2 to 3 years down the line?
For the coming financial year, we are targeting our revenue of around 450 to 500 crores in our TV business, in our JV company. That's our target. Going forward, we'll be coming out with the guidance for all the business categories. Maybe in a few weeks' time, we'll be releasing guidance for FY25.
So we'll be awaiting that guidance. But some more clarity is required from you. You spoke about the JV with the China Group. Now, the China Group is a group that does have connections to a player that has significant presence both in the TV as well as laptop manufacturing, which is the Padgett Group, a part of Dixon. So going forward, are you looking at any tie-ups directly with Dixon, because they are such a large player and they have onboarded quite a few clientele? So what is the total number of clients that the JV already has, and going forward, what is it that you're targeting there?
So China Group earlier had a stake in Padgett, which is now a part of our Dixon group. Now Jana is not part of that Paget group, but definitely Jana itself has a good network with the industry players, and we are talking to some clients for our IT hardware business also, because our company, Goodworth Electronics, is a recipient of approval for IT hardware PLI 2.0. So we are working on that, and we are hopeful of getting some business into our IT hardware segment also very soon.
Okay, all right. So this is something that you'll be exploring as well. Mr. Gupta, what is the export as a percentage of revenues right now? Is it minuscule? And are you looking at expanding that pie of revenue?
So right now, exports is negligible for us, but we are looking to grow that business. What we feel right now, there is a cost disability between us and China when we compare ourselves with China. So we are working with, once we are able to achieve some critical threshold of economies of scale, and as the component ecosystems deepens in India, we will be able to overcome those cost disabilities. And then I think it's a matter of maybe 2 or 3 years. Exports should open up in a big way for all product categories.
Mr. Gupta, while you did mention that you will be giving specific guidance in a few weeks, across various product categories, broadly, if you could give us a guidance for FY25. FY24, the guidance that you're given is a 2,800 crore top line, a 210 crore EBITDA, and a 7.5% margin. On that, what is the kind of growth that you're expecting?
Please pardon me, I cannot share these specifics right now, but please understand, we are created a funnel of products. As I told you earlier, we have created a funnel of clients. We are already onboarding a lot of clients in our washing machine business, and we have added quite a few clients in our air conditioner business. We are very bullish on our TV business. So we will be releasing a formal guidance to you, but definitely we target to grow profitably in all our product categories. That is our target.
Okay, Mr. Gupta, we get that point very close to Q4 numbers as well. So we'll speak to you soon when those numbers are out and ask you for FY25 guidance. But thanks a lot for joining us, and have a great weekend ahead. For us, it's a weekend, it's a longer one. So of course, it's a weekend on a Thursday itself. But we'll do one thing, we'll slip into a break. As we do that, we have a big announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth. Be it insurance, tax saving, managing your portfolio, retirement planning, there's lots to learn and lots to do. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now, scan the QR code to register or log on to cnbctv18.com, and we'll see you on 11th May.
Welcome back to Midcap Radar. Well, one specific portion of the market that's sensing and heaving a bit of a relief is the NBFC and the banking pack. Now, overnight, what has happened is that the RBI has gone ahead and tweaked certain norms that they had come up with in December 2023. Now, this is regarding lenders' investments in AIF. AIFs are alternative investment funds, and there were certain restrictions that RBI had imposed in December 2023. RBI yesterday has clarified that lenders now need to provide only to the extent of the amount invested in the debtor firm by the AIF, and investments in equity of debtor firms are now excluded from this particular purview. Now remember, in Q3 FY24, quite a few private banks as well as NBFCs had gone ahead and provided for their entire AIF investment in the quarter itself. So names like HDFC Bank, ICICI Bank, Pyramid Enterprises, RBL Bank, and even Indiabulls Housing Finance, all of these companies had gone ahead and done the entire provision. Analysts now believe that a certain proportion of that could actually be reversed in Q4. And on the back of that, you're seeing a bit of a relief rally across some of the NBFC as well as the banking stocks. On the back of that, you're seeing quite a bit of up move, especially across Indiabulls Housing Finance, Pyramid Enterprises.
Relief coming in for those NBFCs. Thank you for making sense of that move, Vivek. But let's move on to our special segment, Midcap Spotlight. Vamakshi is joining us and focusing on India Shelter Finance. Vamakshi, what's the news here? The stock is up.
Well, absolutely, Sonal. The stock is surging in trade today, and that is on the back of a brokerage note that came in from Kotak. They've initiated coverage on this counter with a buy rating and given a target price of 685 rupees per share. Now, this company is a small but diversified HFC. They are focused on lending to self-employed borrowers, which accounts for nearly 70% of their AUM. Even geographically, they are concentrated in Tier 2 and Tier 3 cities, which account for nearly 90% of their AUM. Now, Kotak is expecting the company to deliver nearly 35% AUM CAGR as compared to nearly 22 to 29% CAGR for the peers during FY23 to FY26. So, the company is expected to outperform the growth as compared to the peers. High cost of fund and rising leverage could lead to some pressure as far as the NIMs is concerned over the medium term. But the branch additions that were made in FY23, as they mature, the productivity is expected to improve and the cost ratios are expected to decline to nearly 3.7% by FY27 from 4.9% as seen in FY23. The ROE is also likely to be lower as compared to some of its peers at 13 to 14% in FY25 and 26, and that is mainly on account of lower leverage after recent capital issuance. The ROA, however, is expected to be higher as compared to some of its peers in the range of 3.9% to 4.1%, and that is mainly on account of higher core yields. As far as the valuations are concerned, India Shelter trades at 2 times FY26 book, while the peers trade at a higher valuation between 2.1 to 2.9 times FY26, and the newness of the setup is actually driving a lower multiple as compared to peers. But some of the risks that you need to keep in mind is the unseasoned book as well as the risk to asset quality due to lending to below prime customers. But nevertheless, the stock is on an up move today on the back of this initiation note.
That's right, Amakshi, the stock is up a little over 6% today, and thank you so much for bringing us those details. But let's now focus on the shipping industry. The Red Sea attacks continue to disrupt the global trade. Dry bulk freight rates are also fluctuating due to volatile trading activity in March. How will freight rate look like in FY25? What will be the impact of trading activities on volumes? To discuss these issues, earlier today we spoke to G. Shivakumar, the ED and CFO of G Shipping Company. Listen in to excerpts from this particular conversation.
It accounts for about 20-25 million tons per annum of coal exports. So that's one potential impact it could have on dry bulk. It is not significant for tankers, which is, of course, the majority of our fleet. So we'll need to wait and watch what happens with regard to coal volumes. Spot rates for Q4 on tankers have been, in general, a little higher than in Q3, especially for the product tankers. Some of the Red Sea disruption also pushed rates up. We don't have a forecast for freight rates. We expect markets to remain tight. The way it's panning out is that there's very little new capacity coming into the market, especially for crude tankers. There is some capacity coming in for product tankers. I'm talking about world market capacity, that's world supply, which means that the market should remain fairly tight and therefore keep rates at pretty healthy levels. In general, the trend is firm for the next year.
Some interesting insights coming in from GE Shipping over there. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.